The forex market never sleeps, and neither do I. So let's go and see what the charts have to show us. Now, if you're new to the channel, my name is Nick, and I'm a top author on TradingView with over 260k reputation points. And every day I share a lot of free education and analysis on this channel. So make sure that you subscribe, and I will see you on the charts. In today's video, I want to speak about US oil, and as usual, I will be providing a complete multi-time frame top-down analysis, and by the end of the video, we will try to understand where we have the highest probabilities for the next potential move here on this commodity. Now, starting from the monthly time frame, what we can see is that we have a market which has just tested and rejected a very strong support and demand area. In fact, we can see how here the market tested and immediately rejected its zone to the upside. We then had another test of the support and demand, and at the moment the market is rejecting it to the upside. So on the monthly, everything seems quite bullish, and we can expect more continuation to the upside. Dropping down on the weekly time frame, what do we have? Is a market that has just created this candle here. Now, when you see a candle like this with a green body and a very long wick, what you expect is for the next candle to potentially fill in that wick and provide more continuation to the upside. A negative confluence factor for the continuation to the upside is the creation of this W formation, because in general, after the creation of a W, the market is supposed to create a move to the downside. However, always remember that W formations can easily first become overextended W formations, basically breaking above the high, and then provide a correction to the 0.382 of the Fibonacci taken on the impulse leg. Therefore, if on the lower time frames all structure will remain bullish, this could easily turn into an overextended W formation. Just a quick thing, make sure that you like, subscribe, and let me know in the comments below any suggestions for new videos. Dropping down on the daily time frame, what do we have? Now here in the daily time frame, we can see how in all this impulse to the upside, there is one candle not related to the move, which is exactly this red candle here, which means that when the market tested this area, it actually found resistance at its zone, meaning that the market reacted to this area. And now that we have broken above it and we're currently retesting it, obviously this previous resistance is now turned support. And we can see how the market has already rejected it to the upside, and bulls have already protected this daily close above the previous resistance turn support. So this area is currently still support, and we can expect a potential rejection higher, completing this impulse correction and impulse pattern to the upside. Now, in general, if you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And in that case, what we can see is that the market stopped exactly at the 0.786 of the Fibonacci taken on this daily impulse, and then went all the way up and closed above the 50% and above the previous resistance turn support. So the slippage that we had here below was all the way down to the 0.786 before then getting the rejection to the upside. And so far, everything seems quite bullish also on the daily for a potential rejection higher. So how we will be approaching this potential longing opportunity with students? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily are the best time frames from a directional perspective. And even though on the weekly we have that W formation, overall they are indicating for a potential move higher. But when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, with students, what we will be doing is monitoring price action from an intraday perspective inside of this area, waiting for the market to shift from an intraday bearish market, as we will have, to an intraday bullish market. And if the market will shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point, we would be looking for a potential long with a good risk to reward and good probabilities at that point for the move to the upside, and for the market to complete this impulse correction and impulse pattern to the upside, and for the market to provide and create a potential higher high. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then every single day you get a new daily market breakdown showing you how to apply the strategies in live market. And you also get your questions answered every day in the daily Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description and I will see you in it.